On the hunts, Wall Street raiders corner the silver market. The Hunt brothers, Nelson Bunker Hunt and William Herbert Hunt, attempted to corner the silver market in the late 1970s and early 1980s. They began accumulating silver in the early 1970s, believing that the price of silver would rise significantly due to increasing inflation and global economic uncertainty. Let's look at the steps they took to corner the silver market. 1. Silver accumulation. The Hunt brothers started acquiring physical silver in various forms, including bullion, coins, and futures contracts. They used their substantial financial resources, including profits from their oil business, to accumulate a significant amount of silver. 2. Price manipulation. As their holdings grew, the Hunt brothers sought to manipulate the price of silver upward. They utilized various strategies to achieve this, including buying massive quantities of silver futures contracts, which allowed them to control a large amount of silver without needing to physically possess it. 3. Leveraged positions. The Hunts took advantage of the commodities futures market's leverage, which allows investors to control large quantities of commodities with a relatively small amount of capital. By amassing a significant number of futures contracts, they were able to control a substantial portion of the silver market. 4. Price rally. The aggressive buying and limited supply of silver by the Hunt brothers drove up the price of the metal. As the price rose, other investors, speculators, and even some industrial users of silver became interested, leading to further increases in demand. 5. Squeeze on shorts. The Hunts' buying spree and the rising price of silver put pressure on those who had taken short positions on silver futures contracts. Short sellers had borrowed silver contracts, expecting the price to fall, but as it rose, they faced significant losses and were forced to cover their positions by purchasing silver at higher prices. 6. Exchange intervention. Concerned about the impact of the Hunt brothers' actions on the market, regulators and exchanges implemented measures to curb their influence. Exchange rules were modified, margin requirements were raised, and position limits were imposed to restrict their ability to continue cornering the market. 7. Market collapse. Despite their efforts, the Hunt brothers were unable to sustain their position in the face of regulatory intervention and mounting losses for short sellers. The price of silver eventually collapsed in March 1980, falling from nearly $50 per ounce to around $11 per ounce within a few weeks.